So I held on, and then it fell 82%. We've got at least another decade in this. At least look for investment opportunities that can change my life. I think there's three things you need to do here. One, income. Income rules the world. Income pays your bills. Income can pay your mortgage. Income does everything. Without income, you got nothing. Income takes hard work. It's hard to get up the ladder, earn more income. Secondly, is you need to have optionality. You need to have things that can pay off. A startup or a hobby business on the side can give you optionality because you can build a business, and a business has intrinsic value, plus it can increase your income. That will never happen if you work for a corporation. Yes, you can have a great career and do fine, but you'll never have that extra upside that you and I have had by building businesses. So that is another thing, is focus on your income, work hard, look for other opportunities that can leverage that income and opportunity set that you've got for you. And then thirdly is, if I've got this income, look for investment opportunities that can change my life. And that doesn't mean being a degenerate gambler. It's like, simply put, if there is a thesis, for example, in cryptocurrency that you and I share, that this is a long-term network adoption of this incredible technology that is exponential in nature and highly volatile, you should be looking at the moments of extreme weakness, the blood on the streets moment, to be buying more, not on leverage, but just putting your money into it. So if you'd have bought a house after the 2008 crisis, you'd have done very well. If you'd have bought it at the peak, you'll have done less well, right? So timing matters. And I looked at this to give you a specific example, just wrote a whole article about this, is I went back with a bit of honesty, thinking, I'm looking at my ETH price and I'm going, why didn't I sell it at 3,000? I should have just, I could have bought it back cheaper. And I know that that is a siren song that goes in your head, right? Mental torture. And I've been in this space since 2013. So I went back and looked at my entries and exits and what I did in the past. And what had happened if I just bought and hold? And what had happened if I bought and hold and added when it was this far oversold? It's very simple. So I figured out that if so what I did is I bought in 2013, $200 per Bitcoin. It went up to,
whoa.
It went up to 1,000. Sorry, it went up to 1,000 in 6 weeks. I was like, oh my God. But I had a long-term thesis. I wrote the first kind of macro strategy paper about the valuation of Bitcoin. I thought this could be worth $1 million. And let's assume I'm an idiot by 90%, it's still worth 100 grand. So this is the best bet I've ever seen. So I held on, and then it fell 82%. And I'm like, wow. But I'd taken the bet and I put money in, was not levered, and I could afford to take the bet. So I just thought, I'm just going to forget about this and just see, because this is a longer term thing. And you don't normally make money that fast and it doesn't normally fall this fast. So let's just see. And then I kind of forgot about it, 2014. And then 2015 starts going up again. And then by 2017, I'm now mentally scarred from an 82% drop, coulda, woulda, shoulda. I then see confusion in the market about either we're going to fork Bitcoin to two different chains. The price is 2,000. I'm now up tenfold. I'm a genius. My macro bet has paid off, sort of. I sell out. It goes up to 20,000 in 3 months later, and I don't mind. I don't mind because I've made 10 times my money. What I did was deviate from my thesis. My thesis was this was a 10-year bet. And I took the money off the table within 5. And then I went back, and then obviously I bought back in June, May, something like that, 2020, and had a good run and put more money into it than I had originally in my original bet. And I worked out that I had, as opposed to just holding my original bet, I used a theoretical number. So I think it was, if you put 10 grand into that first bet, it would have been worth 1.4 million.
Whoa.
By doing the right thing, buying reasonably low and selling reasonably high, and timing the market. That was a small fraction. It was, in fact, I think I made 20% of what I would have meant if I held on. And then I went back and looked at, okay, well, what did I actually do? Because I massively increased my position in June. I still underperformed by 5x. And then I'm like, okay, what happens if I'd done the right thing? What I should have done, which was my framework, which was you buy it when it's on sale, when there's blood in the streets. So I went back and looked at the bottoms of the bear market, assumed I'm an idiot and I can't catch the bottom of the bear market and miss it by 30%. And just put the same amount in each time that I started with. That 1.4 million would have been 30.
Whoa.
Sorry, not 30, sorry, 3.
I was going to say, good Lord.
Had I rolled my profits in, had I just doubled down each time or whatever, the numbers go exponentially larger. And that really stopped me in my tracks. It's like, here's me doing the right thing, buying when it's in a bull market, selling when it's in a too strong a bull market, buying when it's down a bit. And I still didn't do as well as just holding it. And if I'd just added to it, I would have done well. And my framework is, this is a long-term trend, right? We've got at least another decade in this. At least. Probably 2 or 3 decades. But this part of it is going to continue to do very well. Sure, Bitcoin over time, as it gets more users, more adopted, it won't go up as much each cycle. But there'll be plenty of others and plenty of opportunities. So what we should be doing is using this, thinking of the money you've put in as your retirement money and writing it off. And then just adding, if you've got money in a bear market. Now, the problem is most of us don't in a recession. But a friend of mine taught me very early on, he said, Raoul, there's a key thing I've learned is he who has cash in a recession is king. So that's that combination of income and opportunity. You've got income, you've got some cash, and now everything's on fire sale prices. You're the king. And if you were lucky enough, like you and I, to have bought slightly earlier in the cycle, then for goodness sake, don't look at your loss of wealth from peak. That's stupid. That's the American dream, fixating on something that doesn't exist. Think, okay, fine. I'm still in, I'm probably still up. Don't think, oh, my net worth's down 50%, this is the end of the world. No, that's not how it works. How it works is you need to be in it to win it. And you can't be in it to win it if you've got leverage or if you're out of the market. And so if you say to me, well, that's difficult for people, sure, then put less in. It's as simple as that. You get to the point where you can sleep at night, then you've got the right size bet. And once you have made money and it's compounded, then don't look at it from the peak to trough. So one of the tricks I've learned with myself in a slightly different thing is wine. I love wine, and good wine is expensive, but it's a lot cheaper if you buy it early, i.e. when it comes out. So I bought, and I've just taken a delivery of stuff I bought 15 years ago. Now what I do is this little mental trick, which is I write off everything I pay for wine when I buy it, because I don't see the wine for 15 years, so why do I care?
Whoa.
And so mentally it's gone to zero. So now I'm able to drink wine which I would never open because I haven't paid for it. I write it off. And it's really helpful to use mental tricks on yourself to stop yourself doing things you shouldn't be doing, which is selling at the low, buying at the high, or buying a bunch of wine and then not being able to drink it. And you actually buy it to drink it. I don't sell wine, but if I did, I would have just sold all my wine. I've never have tasted amazing wines. It's these mental tricks we have to play.